For Tuesday the 21st, I want to review how the day played out. In the morning, we opened highly in premium. You can see that easily on the 1 hour chart. Taking all the drawings off and using this structural area here, you have a large impulse, and if you draw it from here to here, you can see that you're in premium. There's not much to work off of here except for 4020, perhaps 4038 half, and then perhaps 4055 on the higher time frame. When you put the drawings back on, here's how the morning played out. The AM session pre 9:30 did not look particularly strong. It was 45 minutes. I was watching it here, and it was 45 minutes inside of a 5-point range. So I elected not to do anything with it. But I did see that these relative equal lows were put in, and I expected that the market, since it was rallying, was going to crash into them. When 9:30 immediately rallied at the open, I thought, okay, probably what this is going to do is exactly what it did. It'll come into 10 o'clock, the 10 o'clock macro, create a high, gap, and then go back down through these lows, and I actually thought down through these lows. It does not end up doing that on this move. However, a couple of things I wanted to point out. And it's a little difficult to see with all the writing, so I'm going to go ahead and delete everything I can in order to get rid of some information that kind of makes this all hard to read. Okay, and I know that's hard to see. TradingView doesn't have the ability to turn off drawings on just one chart, but what I saw here, I didn't mean to delete that, was the turning point. One of the things I've started mapping out is the first gap of the first 30 minutes, and trying to figure out what that could be. But when this came up and didn't hold very strong, in fact closed below it, I thought, oh, this could be a turning point gap. So I focused on that. When we came up here, I watched it and I saw that we had a high put in. I did not see any particularly perfect delivery here, but we come up and we get a body delivery, push down, gap, and this becomes perfect. What bothered me here is that we took out this liquidity and this liquidity first before we came back up here. And just as this meeting was, or just as this was going in, I was supposed to be on a call right here, 10 o'clock. So I start to get on the call, and 10:04, I'm on the call and I'm watching it come back, and I'm going, I would want, if I'm going to take this, I would want to see it basically come up and then make this bear bar or even a bull bar, and then just test the wick of it, and then I would sell it. But it came right up, broke right into this fair value gap, and then sold off. The only reason I'm going through and belaboring kind of this point, because it's really obvious to see and there's no real reason to do that, is that what you have to notice here is that the deep penetration was then met with a wick through that closed below the consequence. So that would be really your only evidence. You had to have just said, okay, I'm going to sell it on the close, and then I'm going to put my stop right up here. So that would have been 5-point stop there. But what was more consequential is that we come down into the daytime frame fair value gap, and then we run right back up to this turning point inception gap, and look at the perfect price delivery and the algorithm that get the perfect price delivery, and then gap. So this is what tells you we're going down. So as soon as we come back in here, we're just looking to sell anywhere in here. We're looking to take that out. Okay, second to that, I was looking to go long here. After this bar, I did go long, but once we did not, after we had put in this low and then that low, I expected this to race up, and it didn't. And although it went right to this target, I cut the trade. I just said, look, I'm not going to babysit something that's just going to do this. This is a crappy day. This isn't a great day to be trading anyways. So I wanted to just cut the trade and divorce the trade rather. So I did that, and it's okay. I ended up then getting popped a couple of times on the way back through here as prices coming up. I thought maybe because of how weak this was coming up and how much dollar was rallying, it would turn here. But anyways, I don't need to cover all that. I just really wanted to make a big point about the turning point inception gap at the open when I called us being in premium in this particular configuration. This is a completely easy trade to be aggressive on under normal circumstances, and I'm just going to make a note that I can study. I should study this particular configuration, because the note that I made of it before this happened was that if we reverse that again, that would be a second turtle soup, and it actually was. We had one here, and then I said if we took that out again, that would be basically a second turtle soup. So, maybe it's not that big a deal that it took the liquidity out. ICT took it, and maybe it's okay. Maybe it's just one of those things where we say it's just part of the probabilities of whether or not it's going to work out. But in any event, that was the thing I wanted to cover, is the Inception reversal gap on a Tuesday before FOMC.